is Stanley Sutandinata, and I'm a junior analyst with the PropTech Global Innovation Consulting Practice. As someone who is very passionate about the real estate technology sector, I'm proud to be serving as the MC for today's critically important webinar. I'm also a longtime supporter and fan of PropTech and appreciate their team inviting guest MCs like myself to host their webinars. This is another terrific way the PropTech team is supporting and encouraging the next generation of real estate tech leaders. Coming up next Monday, November 16, don't miss another webinar from our PropTech Consulting Talk series on best practices for tech adoption in the real estate sector. Hear from several of our world-class consultants and guest speakers as they share insights on how real estate companies are adopting and building innovation cultures within their organizations. You can learn more about all of our upcoming events, including our Business Intelligence Summit in January and next virtual demo day at www.cretech.com/events. And now, I would like to introduce today's moderator, Ben Lerner, Managing Director at Lerner Associates. Take it away, Ben.
Good morning and good afternoon to everybody watching from around the world. It's great to have you on board. Thank you, Stanley, and thank you to the PropTech team for hosting this webinar. We're here today, we're going to spend the next hour discussing special purpose acquisition companies, otherwise known as SPACs, and their role within the PropTech space. Specifically, we're going to talk about Porch, we're going to talk about Porch and their upcoming IPO, and we're going to take a deep dive into that from the people involved. In terms of SPACs, The Real Deal has already noted that over the course of 2020 so far, 160 SPACs have so far gone public, raising close to $60 billion. Not necessarily in PropTech, but SPACs are definitely becoming something and a force to be reckoned with. In the more PropTech space, last month alone, Tishman Speyer announced the formation of a new SPAC, raising £300 million for their dedicated PropTech SPAC. In July, Porch announced that they were going to become part of a merger into PTAC, which is PropTech Acquisition Corp, as part of their SPAC and their IPO, which is due to complete soon, and we'll hear more about that. But diving deeper into Porch, understanding who Porch are, understanding what SPACs are, why Porch has entered into this merger, and everything there is to know about special purpose acquisition companies, we're joined today by the people involved in that Porch deal. So we have on the webinar, we've got Constance Friedman, who's the founder and managing partner at Moderne Ventures, who were early investors in Porch. We have Matt Ehrlichman, who's the CEO and co-founder of Porch. And we have Tom Hennessy, who's the co-CEO of PropTech Acquisition Corp, the SPAC involved, and also managing partner at Hennessy Capital. So what I'd like to do is take a minute to introduce, or to have the people introduce themselves and talk about a bit about themselves, their background, before we start to dive into the SPACs, the Porch story, and then how that relates to the wider PropTech space. So without further ado, Matt, starting with you as the founder and CEO of Porch and where this all began, do you want to kind of give us a minute or two on yourself and your background?
Yeah, I'm happy to. It's great to be here with you guys today. I'm excited about the topic. It's a great one. I've been a technology entrepreneur. So I founded and been the CEO of Porch, where we launched this company about 7 years ago after founding it about 8 years ago. But prior to Porch, I've built a couple of companies. So bootstrapped a software as a services company out of Stanford, had a good run, built it up and sold it for a little more than $60 million. And then was one of the few executives at the acquirer that we took, built up and took public about 9 years ago. And then again, I've been building Porch, since then. And obviously we'll talk more about the company, which I'm excited to do, but it feels to us right now that we're just about entering this next phase of the journey as a public company, and an exciting time certainly for us.
Yeah, absolutely, it certainly is, and I'm as intrigued as everybody to understand a lot more about SPACs, and I suspect they're going to be here for a while. We're going to see more and more of it. So both in terms of the Porch story and SPACs in general in the PropTech space, yeah, it's great to have everybody here. Constance, as somebody who invested in Porch early and kind of got into this particular ride at an early stage, do you want to give us a couple of minutes on yourself and your background?
Sure. Hi, everyone. My name is Constance Friedman, and I'm the founder and managing partner at Moderne Ventures. So we invest in early stage technology companies all around real estate, finance, insurance, and home services. We've been doing this since 2008. We're on our third fund right now. We actually work out of 3 entities, the fund itself. We've got a network of about 700 executives and corporates across our industries, people looking to find new innovations in technology like Porch to help them create competitive advantages. And then we bring them together with our companies through a program we have called the Modern Passport. So yeah, we came into Porch around their series, well, I guess after their Series B as a bridge financer, and ultimately led their Series C. Porch was part of our Passport program and an investment, and really excited to be at this stage of the company with them.
Excellent. And you ultimately were involved in part of that deal as well and looking at the exit and the merger. So yeah, we'll definitely call on you throughout to give us your thoughts on the SPACs in general and Porch in particular. Moving on then to Tom of PTAC, PropTech Acquisition Corp. Do you want to give us a little background on yourself?
Sure. Thanks, Ben, and thanks to CRETech for inviting me on today and inviting Porch and Modern as well. So really pleased to be here with you all. I'm Tom Hennessy, and I serve as co-CEO of our SPAC, PropTech Acquisition Corporation. And so our SPAC is, our vision is really to be a next generation SPAC investor focused on real estate technology. And we're agnostic to either commercial or residential technology. Our mission is to be a strategic growth partner for founders like Matt and his management team and shareholders like Constance. So we're really pleased to discuss this deal a little bit more with you all today. Prior to raising our SPAC, I and my partner, Joe Beck, were senior investment professionals in Abu Dhabi, investing on behalf of the Sovereign Wealth Fund, Abu Dhabi Investment Authority. And prior to that, I was based in Chicago, working for Sam Zell. So thanks, everyone, and happy to kick it off here.
Excellent. Thanks very much. So as you can see, we've got all the relevant people involved in the particular Porch deal from Porch's inception all the way through to the future. So we're certainly well poised to discuss this. For those of you who don't know me, I'm Ben Lerner of Lerner Associates. I've spent almost 20 years in real estate tech, both on the operational side and strategic side with our own software business that we sold back in 2017. And since then, and along the way, having focused on M&A, which is what I do now. So M&A advisory within the PropTech space, working with potential buyers of software businesses or indeed IoT, smart building businesses, and working with founders and sellers on both sides of the chain there. So moving swiftly on, we finished with you, Tom. So let's come back and start with you. Do you want to kind of give us a high-level overview? What is this SPAC? What is a special purpose acquisition company?
Sure, I'd be happy to do that. So SPAC, that is an acronym, Special Purpose Acquisition Company. It's effectively an investment vehicle. It's a fund similar to a private equity or venture capital fund that's raised by a sponsorship team. Our team includes myself, again, my partner, Joe Beck, our board of directors who come from a variety of experiences and skill sets, including VC, investment banking advisory, sell-side analysts, and our senior advisors. And so the sponsorship team raises the funds, and sponsors similar to a general partner, raises the funds from public equity investors, predominantly hedge funds and large sophisticated investors. And we raise those funds to invest in one business. So unlike a private equity fund or VC fund that may invest across multiple businesses, we invest in one. And at the time of our investment, the investment is called a merger. So our SPAC is merging with Porch that effectuates a business combination, and thereafter Porch will be publicly listed on NASDAQ. And so a SPAC is in effect a sponsored IPO. We like to call it a sponsored IPO in that our sponsorship team brings to bear certain relationships and expertise and a unique innovative vehicle to help assist, in this case, Porch and Matt and his team get public in a more certain and accelerated manner. It's also a pre-sold IPO in that we've already raised the public capital, the float. The float that we raised, our SPAC, will become the float of Porch going forward. And so similar to other public alternatives, we think the SPAC is increasingly becoming more mainstream, much more institutional way and an alternative way for companies to pursue a public listing. So it's really a third leg of the stool. So you have your direct listing, you have your traditional IPO, and now you have the SPAC. So it's really the third alternative. And so we think the SPAC brings to bear a lot of different attributes, benefits, and risks as well that we can certainly discuss today.
Yeah, absolutely. I'm sure it both brings the benefits to yourselves and to your investors, and likewise to Matt and the wider Porch team, as well as Constance and her team as previous investors. But just staying with you for 1 second, Tom, the investors in the SPAC, are they different to regular investors? What attracts them to investing in a SPAC rather than investing in a fund? Tell us a bit about the investors that you have on board.
Sure. So there's a couple paradigm shifts that have happened recently in the public markets. One, given the proliferation of private capital, private equity in particular, private equity has been acquiring public companies and taking them private. So that's number one. There's fewer publicly listed companies today than there has been in decades. The second paradigm shift that's happening is there's just fewer IPOs, fewer traditional IPOs. So when you take those two things together, there's less supply of really exciting, high growth, attractive businesses in the public markets. And the SPAC is solving for that to a certain extent by investing in a very exciting high growth business and bringing it public, like Porch. And so our investors invest in us, both because it's a sponsorship team, but also the theme. So real estate technology is an interesting category within the tech universe that's maturing and growing. And so our investors invested in us to get access to Matt and his team, his management team, and to a really exciting story, and to participate that from the very beginning. So effectively from the IPO.
Excellent. Okay. So you created a SPAC and then you decided to focus on PropTech, or you decided to create a SPAC focused on PropTech. Why PropTech?
Yeah, we made a couple bets when we raised our SPAC. We raised it in November of 2019, $172.5 million. The first bet was that given that my partner and I came from a more traditional real estate and investment background, investing across asset classes, across gateway markets in the US, we are increasingly seeing the impact of technology on assets, the impact on value and operations and capitalization. And so we decided to pivot our careers and really bet on PropTech. And so we see that the SPAC provides a unique vehicle, again, to help businesses get public. But it's really at the latest stage of privately held business. So I'm sure Constance will walk through the VC history of Porch, and Matt can as well. But at some point in time, it's a late stage business and it's going to get public. And so our bet was that there would be many exciting companies that are at that stage, that late stage, pursuing what we call decision point on growth. Am I staying private longer? Am I selling to a strategic private equity? Am I going public? And that's a very difficult decision, but an exciting one as well. So the bet was on the maturation of PropTech. And the bet was also that venture investors, predominantly the investors that support and back businesses like Porch, would be amenable and open to a SPAC exit as a monetization route. And so we were very pleased that Moderne, as well as the other shareholders, were supportive and excited about this path.
Excellent. Okay, so Tom's created a SPAC. He's looked for something in PropTech space, and he's stumbled upon, or should I say, went out and chased Porch. So Matt, turning to you as the co-founder, CEO of Porch. Give us a little background into what is Porch, how did Porch get off the ground, what was your vision all those years ago?
Yeah, I'm happy to. Like I mentioned, I had built a couple of companies before Porch, and how I selected this space is the classic entrepreneur story. I was in the process of building a home with my wife and our young family, and I knew I wanted to go build one more company and wanted to go try to build a truly great legacy company that solved a real problem. And I wasn't yet sure what that industry was going to be or what that problem was going to be. But as I went through this process, again, it's the classic entrepreneur story where you just deal with that personal pain, and and it creates that spark of inspiration and energy. And I wanted to go solve it. And specifically, we wanted to be able to go after making the largest asset people have in their lives, their home, and make it simple. From the beginning of the journey when people are moving into their homes, right now moving is the third most stressful time in life, only behind death of a family member and divorce, which is crazy. And as you look forward into how they maintain their home, it's just way more difficult than it should be, way more difficult than it is to rent, where everything's kind of taken care of for you. And so we believe from the early years, and I still believe this, that is going to fundamentally change, over time. It seems inevitable. There's just too much money at stake, and there's too much pain. And so Porch really was born, with that idea. 7 years ago, when we launched the company, we started as a data-driven home services marketplace, helping consumers with projects for their home. And we grew well over those first couple of years, but it was about 5 years ago that we made a really key pivot as a company into where we are now, into this very differentiated platform. And so Porch grew from that point through that pivot to become a vertical software platform for the home under the Porch Group. And so people go to porch.com, and think about us like Home Advisor or AngelList perhaps, but porch.com is just one of our many brands. And if you go to porchgroup.com, you'll be able to get a sense for this platform that we have built out over time that's very unique and differentiated. But at this point, Porch, again, is a vertical software platform. So we provide ERP and CRM software into a number of home service verticals. So for example, we provide software into the home inspection industry, where we're by far the largest provider of software to home inspectors. 26% of all the home inspections that happen in the country are managed through our software platform. We provide software to moving companies. We provide tools and services into a variety of other industries like utilities and others. So these companies right now, we provide software and services to 11,000 companies today. And those companies, yes, they can pay us directly with typical SaaS fees for the software, but we've innovated around the business model and the pricing model where sometimes instead of getting paid with typical SaaS fees for our software, we encourage these companies to pay us by giving us access and introductions to their home buyers. And so Porch meets home buyers via these companies at very large scale. In fact, 65% of all the US home buyers every single month are going through our software system. And Porch is getting introduced and access to 27% of all the US home buyers each month from these companies, from these trusted companies that these consumers are using. And so Porch is introduced to these consumers at the very beginning of the journey with their home, right after their home inspection. And we generate most of our revenue from those consumers by then helping them now with the highest value, the most critical services, for their home. So as an example, Porch helps them with insurance, or with moving, getting a mover, or with getting TV and internet set up for their home, or with getting security set up for their home. All of these things that happen before that consumer moves in to their new home. And then once they're in their home, we'll help them on an ongoing basis with the other projects that they might need. And so Porch's platform has really grown and built these very significant moats where we're the only company that has this type of early access to these home buyers when we know that they're moving. And we are able to leverage that access to go very deep into a select set of the highest value services. As an example, with insurance, we've launched and have our own in-house nationwide insurance agency called Elite Insurance Group, just as one of many examples, where we're able to go do these integrations with all of the major insurance carriers and be able to help consumers before they go to Google and start searching online, for insurance. We meet and are introduced to the consumer earlier ahead of that and can present them with all of their options for insurance that they have to purchase for their new home. The same thing is true for moving and for TV, internet, et cetera. And so as we look forward, we've built actually fairly quietly, I would say, over the last 5 years. We've really tried to not publicize this platform that we're building out. And obviously we are now, through this process of going public here. We've really tried to build these very significant moats by deeply embedding ourselves in these critical companies, home services companies. And then through that, again, now we get to be this key core partner for consumers to help make their home easy. And we are able to just continue to iterate on that, helping them with more services during the move, and then helping to extend that experience that they have with Porch after their move. And through that, we've been able to grow the business very, very quickly, 50%, type CAGR, very high margins, and build meaningful scale that just sets us up well to be a very, very strong public company.
So am I right in saying that through your platform alone, $2.2 billion of services went through in 2019?
Yeah, that's exactly right. So we are able to
Huge
meet consumers at very large scale, and we're able to help them with lots of things that they need to get done with their homes.
That's truly amazing. That is amazing. Moving over to you, Constance, and I appreciate that you've been hanging in there for a while. As you mentioned before, you were an investor in Porch through Modern. You came in at Series B, did you say, or beyond that? Can you give us kind of a little insight into how you got involved with Porch, what you looked at, what you liked about Porch initially, and you coming in as an investor then?
Yeah, sure. So I think it was similar to how Matt described why he started the company. We look at our investments kind of the same. What are the gaps, opportunities, and challenges within the industry that exist? And we look for those companies that we feel fill them. And we look at that broadly within real estate, and we look at it, about 60% of our capital comes from the industry. So some of the largest residential real estate, as well as multifamily, commercial, and multi-asset class real estate players in the world are part of our fund. And so one of the so we've been looking at this space for years because, as Matt said, it's painful. It's painful to move. And you see that from the consumer perspective, but more important on sort of the B2B aspect of it, our partners, our investors are constantly looking to add value in the transaction. It's not just about the transaction anymore. It's about the experience, right? And so if I'm a residential real estate agent, it's not just about making sure that that home closed, but if I want to get more referrals, I want to get more business, I want to continue growing, I need to make sure that that experience around that move was very great, and that I was someone who helped make that experience great. So one of the things with Porch, and again, we've been looking at this space for years, and having looked at the space for years, it was easy to see when we started looking at Porch that they actually were able to do something that many others have not been able to accomplish. So not only could they service that home services industry, but connecting the consumer with home services that were necessary, but they had scaled it, and they had scaled it nationwide. Well, it sounds easy, and there's a bunch of companies that have raised a bunch of money to try to do this. It's actually very difficult, and Porch is one of the very few that have succeeded in doing it. So not only did were they able to provide that, but they also, as Matt talked about, have this marketplace, right? It's not just about one aspect of the moving process. It's about everything from the inspection software that will spit out a repair report, a cost estimate, and then the ability to do the repairs. So Porch can provide all of that, all the way to planning my move, getting in there, actually, helping me hang my TVs or paint my house, or, kind of everything through to getting the insurance and all those painful things that you have to do during your move. Porch can really help assist. But where we got really involved was not on the consumer part, but really on more of the B2B part. So Porch will partner with some of our partners, for example, the real estate franchises and real estate brokerages, to allow their agents to offer the Porch, call it the concierge model, to give to their clients, and therefore be adding that additional value, that additional experience around the transaction. And so we found that to be, really exciting, something different and unique than any of the competitors were doing, and certainly more successful than a lot of other wannabes in the industry behind them. So that was one of the primary things, primary reasons why we got involved.
Excellent. Thanks very much. We've had a couple of questions come through on the chat and the Q&A, both of which will actually be answered as we go through the session. So a question on Porch's annual revenue and projected revenue, and we're going to talk about Porch and the way forward. So we'll park that one. And then a question again about earlier when we started talking about SPACs and what SPACs are. Do we think that other subsegments of PropTech, besides for the service marketplace, are going to see SPACs coming through and look at SPACs as a potential exit? And if so, which ones? And again, we're going to talk about the wider PropTech space further down the line in the session. So we'll park those, but we hopefully will come back to those. But staying with you, Constance, and Matt for now. So moving on then, we look at potentially exiting an IPO. What made you look at the SPAC route? And Tom mentioned, I think the word he used earlier was you guys were very supportive of the SPAC. Did you go out looking for a SPAC? Was that your preferred route? Was it direct IPO? Because there weren't many SPACs around, and there still aren't that many SPACs around. So kind of what made you kind of go down that route? Or was it purely Tom reaching out and initiating conversation?
I'm happy to take it. It was candidly, there was not nearly the amount of press and buzz around SPACs, when we started this process than there is today. And so I would say, with Constance and myself and our board, it was not really even on the candidate list in terms of paths a year ago, let's say. And but as we met Tom and Joe in December, and through several months of just introductory meetings, and then coming out and meeting our team before really COVID hit, we learned more and more in terms of both the pros and the cons of a SPAC. And we were more thinking of going public through a traditional IPO, likely late 2021, in terms of the most likely path, forward for the company. And we were gearing up, we had a whole checklist of things we wanted to go get done between a year ago and a year from now. To be able to go and be ready, like for example, go run at profitability in the back half of this year, and we ticked over into being profitable midway through this year, really in that pursuit. But as we really came to know the SPAC, the reason that we chose this path is in a large degree timing, where we were able to get out now and go public really a full year earlier, than we would have through a traditional IPO. And for us, that's really important, really meaningful, because not only are we able to go get public, we're able to simultaneously raise a significant amount of capital through this transaction, both with the SPAC proceeds that Tom had mentioned before, as well as we went out and we did a PIPE roadshow where we brought in $150 million PIPE. We actually started as a $50 million PIPE and upsized it twice to $150 million PIPE. It was still meaningfully oversubscribed to bring in really, really strong long-term fundamental investors like Wellington and others that are very strong. And so with that, being public and being really well capitalized a full year earlier is exciting for us, because one of our growth strategies, in addition to all of the organic levers we can pull, is to be able to go and add in select acquisitions, that really fit our strategy and the platform that we're building out. And being public and well capitalized allows us to be more aggressive and really play offense. And that was a big driver for us to be able to go down this path.
And I'm sure as you talk about timing, so yes, that's been accelerated by a year, but at the same time, there's a huge amount of effort in going down the direct IPO route versus partnering with, or merging with a SPAC that's kind of all packaged up and kind of takes that load off you to some degree. So I would imagine, you save a huge amount of time and effort in that process as well. But Constance, from your perspective as an investor, what attracted you to going down the SPAC merger IPO route? And I appreciate that Tom is sitting here listening intently, but what attracted you particularly to PTAC as a SPAC?
Yeah, so I guess I've been fascinated by SPACs for a long time. I started in maybe pre-venture. I started with a search fund, and which is sort of like a smaller private version of a SPAC in a lot of ways. And so it's been something that I've personally been aware of and fascinated and followed for a really long time. And so I think a sort of funny, but like just a pointed relationships are everything story. The way that this all really came about, and maybe it would have come about anyways, but I first met Tom as we were raising our fund, and he was this was prior to him forming PTAC, and he was on the allocator side, and I was pitching Tom as an LP, and Tom left shortly after, and he said, I'm sorry, I'm not going to be able to see that through, but, I'm forming this PTAC acquisition. I'm looking for a PropTech SPAC, and would you happen to know any companies? I was like, well, actually, we have a great candidate for you. And so that's where this marriage kind of all started, I guess. And so Tom and I had a bit of a history, and again, like relationships are everything, right? In this world and everywhere. And so, all the pieces had to fit together. But I think, it's kind of separate from that, as Matt said, this was really just a big opportunity for the company. I mean, SPACs traditionally were, in a place where they offered companies an opportunity to go public earlier than what, say, the public market has come to be. I mean, way back when companies could go public with, a couple $100 million in revenue, with all the private capital that was flooded into the market, companies have gone later. And, this is just another, really just another exit opportunity for shareholders, and a good exit opportunity for companies to find. And so I think that as we're seeing right now, kind of the popularity of SPACs, I mean, this is one of the reasons, because there is a lot of good capital out there looking for really great deals and really great opportunities. And as a shareholder in a company, this does provide a really good opportunity. There's so much growth ahead for Porch, and we've been, as investors, we've been behind Matt looking at it and looking at, there's always more opportunity than there is resources, and this is going to give us an opportunity for the resources that will fuel the growth that's yet to come for the company.
Excellent. Okay, so Tom, from your perspective then, so you and Constance had a bit of history, your words, and you kind of met Matt through that process. What makes a good target for a SPAC? What do you like about Porch? What kind of made you think that this is the one that we want to go down? And then following off from that, to kind of bring you Matt and Constance back in, and just let's talk a little bit about the deal structure and negotiations. What does a merger with a SPAC actually look like? But Tom, from your perspective, what's an attractive target?
Sure. So first and foremost, we're looking for category winners. And I think that addresses the question about, can a SPAC work in other categories? And the answer is absolutely yes. If you can find the category winner, and in our case, we're very proud and pleased to have partnered. We will partner with Porch and Moderne and all the other great shareholders in Porch. Porch is absolutely a category winner. So it could have been in an entirely different category. It could have been construction technology, for example. It could have been other types of software. It could have been a company that focuses on commercial real estate assets. But in our case, Porch, focusing on the home, really innovating in and around the home. We're really excited about that because it's a huge TAM. The U.S. homebuyer, it's really the most valuable consumer is the U.S. homebuyer, because they're on their journey to purchase their biggest asset in their life, which is the home. So that's really the first criteria. Then we get into some more nuance here, and specifically what we're looking for is a business with scale. So a privately held company with enterprise value over $500 million. And so Porch checks that box. We're looking for a compelling public market growth story organic and/or M&A. In this case, Porch has both. Profit, really, when you focus on some of the quantitative financial metrics, so proven revenue model, attractive margins, unit economics, and EBITDA. So Porch is growing at a CAGR of 50%. Matt mentioned that it will grow at that rate into 2021. They have 80% gross margins, very SaaS-like, attractive margin profile. Unit economics, 30 times LTV to CAC, we think is very exciting as well. It really speaks for itself. And EBITDA. So EBITDA, Matt mentioned this, they are EBITDA positive as of June on a month-to-month basis in this year, and they'll be full year EBITDA positive next year. So really the trifecta is, like we like to call it, it's high growth, attractive margins, and profitability. And that's very rare to find. Value. So we'll get into this in a minute, and Constance and Matt will speak to this, but certainly an appropriate valuation based on a reasonable set of comps. And we were able to triangulate on that valuation based on a number of different types of comps. Matt can speak to that. Market story. We're looking for a market story that will attract public investors and research coverage. It's very important to attract, from a fundamental institutional perspective, to have initiating coverage immediately after our close. And we recently held an analyst day, very well attended, 2 days actually, with sell-side analysts to tell the story. Then there's a combination of a need for public listing and a desire to be public. So desire to be public, I think, comes down to whether Matt and his management team want to be a public team. And in some cases, the founders, management don't want to be public; they want to stay private. But in Matt's case, he very much aspires to be a public CEO, and they have a very capable team of executing. And then need for public permanent growth capital, both through equity and debt, monetization opportunity for the shareholders, stock as currency for incentive plans, really the public branding, all of that can be incredibly accretive to the story. And then finally, more of a nuance, something that we're looking for is public ready. So robust financial systems, management, and having a CFO. So Porch recently hired a gentleman named Marty Heimbigner. He has a couple decades of experience, public and private CFO experience. So they just recently completed their PCAOB audits, which are now in our S4 document that's filed publicly. And so all of those nuances are incredibly important to the public journey here.
Excellent. Okay, so I'd like to move on in a second to look at the future. What does the future hold for Porch?
Ben, sorry, just before you move on, I just want to kind of boast about something for a second,
Sure.
just related to what Tom said. So I think there's two also kind of cool things about this all coming together. Matt sort of alluded to it before, but this process started many months ago. And while there's been that rise of the SPAC, Tom started doing this before SPACs were cool, right? And so I want to say, number one, this isn't just because, it's getting popular. And so this is yet another, this was a really well thought out, really focused strategy, and something that really came together in a meaningful way, not just to jump on the bandwagon. So I want to say that first. And the second thing that I want to point out that, I think I'm just proud to be part of, honestly, is that when you look at all these SPACs that have emerged, you are starting to see the shares sort of waver a little bit, the value sort of waver a little bit, because people are trying to figure out, well, what's kind of because it's cool versus what's quality. And I want to point out that, the Porch where we're the PTAC where it's trading at is certainly representing quality, and it's higher, it's growing and it's going up, and I think that that's really important as just anyone is thinking about SPACs, what to be, how do I think about investing in it, and how do I think about, how they're trading, and what are sort of the characteristics that you should know about, and those are things to look for as an investor.
Excellent. Okay, so before we go on and talk about the future and when it's all going to happen and the next steps, could we spend just a minute, Constance and Matt, and just talking about the structure Tom talked about the EV and the actual value of the business. Can you give us a little bit of an insight as far as you're able to into what that kind of deal looked like and how you approached it?
Yeah, sure. One of the advantages of a SPAC is that both parties are able to get clarity and certainty, relatively early on in the process. Whereas through a traditional IPO, you don't really know, as there's been lots of press and awareness around the fact that you don't really know, until the very end. In fact, you don't even really know if it's going to transact, until the very end. What we were able to do, Tom mentioned this, is we were able to negotiate a deal value that made sense for both parties to then progress forward. And when we announced that merger, just ahead of then, as I mentioned, we really went out and tested the market with that PIPE roadshow, where we're bringing in public investors to invest in private enterprises to be able to really assess, okay, how does the deal hold? Are public investors going to like the story? Does the valuation make sense? And in fact, you could argue that the valuation was, and I negotiated and we negotiated, was even low, and that there was a tremendous amount of demand, and dramatically oversubscribed. I would say, we knew it was going to, be very attractive and trade well, but even more so in terms of the amount of demand that came in, during that week-long roadshow. But at the end of the day, here's the reality: is that okay? So we negotiated a 4.4x revenue multiple on 2021 revenues of $120 million, which drives then the enterprise value and the core terms of that deal. The reality is, though, is that whatever path we were to go down, whether it be raise more money privately or go public through a traditional IPO, you're going to have a similar amount of dilution, anyway. And so this transaction is able to get us public, get us well capitalized. Like any other financing, there's dilution that happens, at that particular point in time. But again, it's the easiest, cleanest path to be able to get us public faster, where we can then be able to go deploy that that cash really effectively to go create value for all shareholders. And so Constance hit it on the head, which is, yes, 4.4x forward for a software, company that has recurring revenue, certainly is below, comps that are out there. We also locked in that agreement. It's been fascinating to watch, all the comps just rocket up, as it turns out, over the last 3-4 months, since we signed that agreement, which is, again, for us, that's yes, maybe you're diluting a little bit in terms of where you locked in the value, but again, it just means things will trade up, we believe, as we do get public. And I think the market is signaling that as well in terms of how the PIPE, went. But I'd say that's one key part of the deal. With the SPAC, though, there's also, for the company, other ways to be able to create, value. So you can negotiate an earnout that we did. So for us, if we move the stock over a 3-year period from, around $10 per share to $18, $20, or $22 per share, there is an earnout that's in place that we negotiated in for Porch shareholders, so that if we're able to do what we believe we're going to be able to do and create value for the collective group, that we're able to, be appropriately recognized and rewarded.
And does that differ to a direct? Yeah, so that's what I was going to come to. In terms of, we talked about the SPAC being, more attractive to Porch than IPO for timing reasons. It accelerates the whole process. It takes the onus off you largely in an IPO. But what I'm hearing as well is that you actually can negotiate differently with a SPAC IPO rather than a direct IPO, and that's obviously quite attractive to you.
That's exactly right. Yep, there's more levers that you can pull, in a SPAC negotiation and discussion to be able to get a deal done that makes sense to all parties and to new investors that are coming on board than you would have available, with a traditional IPO. And I think those levers helped, the PropTech group and the Porch group really come together with something that made great sense for them. And again, it's been represented by the market, and the PIPE investors, I think makes great sense for new investors as well. And so, but you're exactly right, Ben. Having those additional levers, unlike with a traditional IPO, is one of the reasons I believe that there is the momentum you're seeing with SPACs right now, is that you're able to go get deals done. And to Constance's point, as long as there's discipline on putting deals together with really high quality companies with strong fundamentals, I think that there will be some really good wins.
Excellent. Okay, so I'm just conscious of time. We've got quite a bit that we want to cover. Let's move on to where do we go from here. So Tom and Matt, you announced this merger in July. What's the process to now and completion? And then what does the future look like for Porch and for PTAC afterwards?
Sure, I'll just jump in with the process quickly, and then Matt can touch on the future Porch. So we expect to close this merger by the end of the year. And at that time, our ticker, which is currently PTAC, PropTech Acquisition Corp, which is trading on NASDAQ today, will flip to Porch's new ticker, PRCH. And that will be a very exciting moment. It will be the first trade party, and that will mark the IPO of Porch. And so right now we're running through what we call the administrative process. There's some SEC commentary review period and other legal administrative processes, and we expect to close here over the next, by year end, over the next 2 months. Going forward, and Matt can speak to this, they've put together a very exciting board of directors, and I'll be participating on that as a member, as a fiduciary to all shareholders, as well as to help where I can.
Yeah, so from a company perspective, it really is a lot like an IPO in terms of what happens, where it is just another way for us to execute an IPO. It's just via SPAC versus traditional. And so just like you would, we're putting together, make sure we have the right public board. So, really proud to invite, new members into the board that have great backgrounds, great experiences. They'll continue to be able to help us. We're making sure that from a team and an execution perspective, we have the right people across the board. So we recently brought in our new general counsel, our new controller, our new FP&A leader to supplement our CFO, just to make sure, again, we have all of the processes and controls to be a strong operating public company. We'll continue that process. And then a lot of it is just then go execute our plan, and having more capital allows us to be able to execute that. And so, as Tom mentioned, we have, our business has 30x LTV to CAC unit economics. Well, having more capital it's pretty obvious to be able to go and invest behind those growth opportunities. And, we're certainly accelerating our M&A, funnel, because it is a stated part of our strategy, as we go through our plans to really build out our platform and to be able to leverage our platform that we've built, where we can go bring in, vertical software companies, in different verticals we're in today, and different verticals that can be able to just be worth more and grow faster, being a part of Porch. And so that's all the types of things that we're driving at right now.
Excellent. Then you and I should definitely continue the conversation afterwards. That's for sure, if that's part of your plan. But Constance, before I come to you, Tom, with Matt remaining largely in the driving seat and driving the Porch vision, where does that leave PTAC, or the actual, for want of a better phrase, the shell company? Where does that leave you in the long term? What's your involvement?
Sure. So it's a finite investment vehicle. So once we complete our merger with Porch, our vehicle PTAC effectively merges into Porch, and so it combines. And so therefore, all the cash that we raise through the IPO, it goes to Porch's balance sheet, such that Matt and team can execute really in M&A, pretty accretive M&A pipeline that they're looking at.
So there's a very strategic role there still in helping that vision.
Yeah, and then as I mentioned, I and another one of our board members will serve as in the capacity of two out of the 9 seats on the board directors, and so effectively that's where our involvement will be going forward as 2 board members.
And then I will just be continuing to both serve as chairman on the board and just continue to be running the company. But again, from our perspective, it's very much like it is today, and just continue to build and drive the company now. Just
drive that vision
entity.
Yeah, and I think just one thing that sort of echoes some of what Matt and Tom were just saying, that anytime a company goes for financing, it's really an opportunity to bring on new talent. And so, the financing here, both the amount, but also, going into a public company, was really also an opportunity for Matt to bring on some really world-class team members, both in the executive team and also on the board. So yeah, I think that's another big benefit of doing this acquisition or doing the SPAC and doing it now.
Excellent. And then the same question that I had for Tom, then to you, Constance. Where does Modern fit in going forward? Are you still retaining, part of the investment? Are you going to be involved going forward?
Yeah, so I mean, as a venture fund, I mean, we often kind of step away once a company goes public. So we're on the board now. We won't be on the board of the public entity, but our shares will, many of our shares will roll over into the public company, and so we'll remain involved. We'll remain to be big supporters and help Porch however we can, because our success continues to depend on their success. So we'll stay very involved as vested shareholders. Excellent.
Okay, so in the remaining few minutes, I just want to kind of step away from Porch for a second and then just look at the wider PropTech space. So Tom, you originally talked about looking for something in the PropTech space. Porch was the one, but if I could then come to each of you and probably start with you, Constance, and say, okay, why have we got the SPAC boom coming now rather than a year ago, 2 years ago? What's your thoughts? And again, this touches on one of the questions that came through. Are we going to see more of these? In what areas of PropTech? What do you see in kind of your crystal ball in terms of PropTech, SPACs, and where this is going?
And this is quite a year to have a crystal ball.
Absolutely.
It would have been nice for many reasons. But on the SPAC front, I mean, like I said before, I think that part of the reason for the boom is there is a lot of new capital coming in. And, particularly in the space, I mean, so if you look at the last 2 years in terms of how much capital is coming into real estate tech, it's grown by about 600%. And, I kind of make the joke that it's not really a joke, it's just true. Back in 2015, when I was raising my previous fund, people would pat me on the head and say, what a cute little niche that you're investing in. And I was like, but this is multi-trillion-dollar niche. And, of course, fundraising was a lot different going forward as, companies like Porch and other successful entities have, really shown their value. And I also think that as an industry, real estate owners and operators have traditionally said, we've been doing this literally for 100 years. We've got 4 walls, we've got bricks, we get how it works. We don't need tech, we don't need innovation. And I think that, like the .com days when the Fortune 500 was like, oh, I guess this internet thing is here. I really think that the large industry owners and operators said, oh yes, the tech thing is here. And so, those, we're really seeing a separation of, I think we're going to see a huge separation of those owners and operators who embrace technology and embrace innovation right now. Both to think about ways of increasing revenue, adding additional value to their assets, but also decrease OpEx, which has very long-lasting effects overall. And so we're seeing a lot of excitement in this space, and I think that excitement could certainly breed more SPACs in the space. And already we're getting a number of people reach out about our other companies in our portfolio and different opportunities to explore. So is this going to be a 5-year, 10-year trend? I'm not sure, but it's certainly one that's going to last for a while.
Excellent. And I'll pose the same question to you, Tom. And then after that, Matt, I'll come to you for kind of your more generic or general view on your thoughts on the PropTech space, given your own background and kind of the wider PropTech. But Tom, SPACs, you went out looking for one. Are you going to be looking for more? Do you concur with what Constance is saying, that there will definitely be more people, more capital coming into this kind of format?
Yes, I absolutely believe so. I think SPACs are here to stay. I think there's 3 options. Again, as I mentioned, to start it off, 3 options to go public, to pursue a public listing. And you have your direct listing, your traditional IPO, and a SPAC, and all of those options are not the right option for every company. So every company will have to be evaluated individually, the pros and cons of each path. But I think in 2020, certainly, especially in times of volatility, great market volatility, SPACs have proven to be a more certain path. There is no IPO window per se because the SPAC is already public. And so I think that certainty, as Matt mentioned, is an attribute that is valuable. And so I do believe there will be more SPACs out there. More SPACs creates more competition, but at the same time, I think that means more companies will recognize it as a potential path for their business. And so therefore the opportunity set opens up. And so I think on a net basis, it's very positive for everyone involved in the real estate tech space.
Excellent. And then Matt, from your perspective as an entrepreneur, what are your thoughts on the general wider PropTech space?
Well, I think that there's a reason that there's been so much more increasing amount of energy and money coming into the market. And it's just that there are very few industries that are as large as the PropTech space is that have as much pain and problems to go solve. You know, I mean, there's been many industries
and the green space. Sorry to interrupt, but with this multi-trillion-dollar industry, less than 4% of venture dollars goes into this industry. And so I think it gives a big greenfield. And sorry to interrupt, Matt, but I just wanted to
I think it's a great. I think
point.
it's a great point. I think it's a great point. The reality is that there you just look around and there's so much opportunity, and it does feel inevitable to me, given how much money there is in these industries and how large they are, that it will fundamentally change. And the industries really have been lagging, you know, behind others. Like they just have not had the transformation that other industries, other major industries have had. And
well, would you stick your neck out? Would you stick your neck out into particular areas of real estate tech that you think are going to see more of this kind of either entrepreneurial spirit or you know, look to IPOs?
Well, I mean, I will advocate for the one that I know the best, which is everything tied to residential. You know, that's certainly where I spend, you know, all my waking time thinking about. And it's not, you know, it's the home, it's renting, it's all these different parts that go into this journey. And then it's all these underlying services industries, all of these businesses. You know, there's millions and millions and millions of these small businesses that support, you know, PropTech, yes, and residential real estate, you know, that are kind of these unsung heroes in a sense of like that just keep all of our homes functioning and going, right? That we don't really spend a lot of time thinking of. But these businesses, you know, are often, you know, operating in the dark ages, right? They're rarely running these really modern, you know, businesses, no pun intended, but really forward-leaning businesses. And there's so much that can be done to be able to help them, you know. And I
guess we shouldn't forget. Yeah, and I guess we shouldn't forget that, you know, versus different types of asset classes within the real estate, everybody at some point has lived in a residential building or has bought or has rented or needs services. Not everybody is been industrial, retail or commercial. So, you know, residential certainly is something that everybody's got a view on and has touched on at some point. Couple of final minutes. Tom, if we just start with you. Question of the evening, what keeps you up at night?
Well, I'm gonna take Matt's answer because I know I've heard this question before, but everything as well. We are focused on the best execution that we can work on together here to get Porch public. And so I will be awake until we see Matt ringing the opening bell with his team in NASDAQ. That's going to be a really exciting event here come towards the year end.
Excellent. I'll give you a couple of minutes to think about the answer now that you need a new one. But Constance, what keeps you up at night?
Like that crystal ball, so many things. No, I mean, I think that I think the biggest thing that, you know, this year has brought more than any year is you know, just the macro, the things you can't control, right? So there's a lot of things that we can control. There's a, you know, execution, you know, it's always challenging, but we can control that. You know, there's but you know, the things that we can't control are, you know, what the market's going to do, what this crazy COVID nonsense is going to do, what, you know, I mean, the effect on the markets that, you know, something like not knowing who our president was for, yeah, and you know, there's so much macro.
Some would argue you still don't know.
All right, I'll just leave that for a moment. There's so much macro dynamics that I think, you know, just simply out of our control. that, you know, for me, that's the biggest thing is the things that you can't control. So, you know, you can't worry too much about that because you simply can't control it. But I think that's the biggest unknown here. It's just what happens on that day, you know, what crazy event or what crazy thing, what crazy test results, what crazy, you know, what announcement happened the week before that, you know, has an impact on what going forward. But I would say that, you know, at the end of the day, it doesn't really matter because it's all about execution. And Matt's built a world-class team, a world-class board and investors behind them. And you know, whatever happens on the day of the IPO, they're going to increase the value of this company, I believe. And you know, ultimately that's what matters.
Excellent. So Matt, final word to you on this in 20 seconds.
Yeah.
What keeps you up at night?
The reality is I sleep great at night, but the worries that I think about, it's really for me about just seeing if I can take and we can take advantage of the opportunity fully. I just think we have a slide in our deck that talks about us building $1.5 billion in revenue company over the medium term, undefined medium term. And I really do believe that that's true. I believe we can go build a meaningful company that's really at scale. I believe it wholeheartedly, but you just have to, there's just a lot that goes into that. There's just a lot of, you know, execution, a lot of blocking and tackling, lots of good decisions, you know, having a great team, you know, that's around you to be part of that journey. And so that's what I think about is just all the things that go into really taking full advantage of the opportunity that we have, you know, earned, you know, through lots of hard work to be able to put ourselves in the spot to now see if we can and truly take it to the next level, you know, on dramatically larger level. And so that's what I think about.
Excellent. Thanks very much. Well, just to wrap up, it's been great. It's been a fascinating conversation, really great insight into SPACs, into Porch, into the process from everybody involved. And I've certainly learned from this session. I hope those who have listened online globally have learned from the session. Appreciate you guys tuning in and appreciate Constance, Matt, and Tom for joining me on the panel. As I say, it's been really, really interesting. Thanks very much again, and look forward to seeing you next time.
Thank you.